Please turn your sound on to hear full explanations of our answers. Thank you. The question is, how much risk is involved in Forex trading? And my answer to that question is that it depends on your personal risk profile, and Forex risk can be managed anyway. Now, I don't really, it's hard to tell if you're asking this question, how much risk is involved in Forex trading? Risk is a relative thing. Everyone is going to have a different idea of risk and also of what is acceptable risk. Now let's compare it to something else similar but different, like investing. Investing is a strategy, it's a long-term strategy, it's buy and hold, and it's very much a passive strategy as well. And the idea also often with investing, because it's people are saving for their retirement especially, or for some other some other goal, that you tend not to risk as much of your money. You tend not to take big risks. You try and diversify out as much risk as possible. Trading is obviously different. It's active. The timescales are much shorter. You are not going to be happy with investment style returns of 5 to 10% a year. You are looking to make it could be 5 to 10% per day or something, but over the course of a year you're looking to make hundreds or even thousands of percent gains. So there's more reward, there is more risk, there's no doubt about that, there is more risk. But does that mean it is quote unquote risky? In my opinion, no, it isn't risky in that sense. So long as you're serious about it, you learn as much as you can about it, you apply yourself properly, you learn from your mistakes, you use good self-discipline, you don't let your emotions run riot, your fear and even greed, and you are as logical as you can be, because that is the secret to success. And also what you have to do is you have to have good risk management too. You have to have good risk management even if you do everything right. If you do everything wrong, it's even more important. But even if you do everything right, you have to have good risk management. This means, for example, looking at your entire equity in your account, not risking too much on any single trade, because although you hope that the trade is going to go the way you want to, nobody is psychic, and you can never say with 100% certainty that it will. So by spreading yourself thinly everywhere, you insulate yourself against the losses that are, some of which are going to be inevitable. Another thing you also do is set a stop loss in every trade. And a stop loss is, what that is really saying is that if the market moves against you in a way that you didn't expect, then when it's moved against you by, say, 3 or 5% or whatever, or 10% or whatever it happens to be, then you have an instruction already in place to say cancel your trade, close out your trade, accept that minimal loss, and you'll just call it a day on that trade. You'll admit that you were wrong, or that you just got unlucky, and it doesn't matter. And it's you've paid a very small price for taking that opportunity, but it was still worth it, because maybe 9 times out of 10 you would have been okay. So that is like I say, you can really manage your risk very easily. And if you have good risk management and you trade properly, as I say, you do all the other things right, then how much risk is then involved in Forex trading? I would personally say very little. Very little risk. I think that people take way bigger risks with their personal lives. With their choice of career, they're at the mercy of their employer to just make them redundant at any time. Their entire industry could go down the tubes over the course of a decade for all they know. It could be outsourced somewhere else. People take, in my opinion, people take much bigger risks with their lives all the time. They just don't realize it. If you are doing things properly in Forex, it really is not that big a risk at all, in my opinion. So anyway, I hope this gives you a better idea about the risks involved in Forex trading, and helps you make a decision about whether you want to go ahead with it or not. It's not for everybody, but you know what? You don't really lose anything for trying and for making a serious effort at it, and you could make a lot of money. That is end of this video. I just want to say, for best results, if you want to become a logical trader, not one that is at the mercy of his or her own emotions. If you want to be a very logical, consistent, profitable, low-risk trader, please have a look down below. I'll put a link to a site that's owned and created by one of the best traders around, this guy called Vladimir, and he helps traders become better traders, including some of the worst traders you can think of. He helps them trade properly, trade logically, to always have a reason to do a trade, to practice proper risk management, etc., etc. And that's the only way that you can trade Forex. You can't do it on gut. You can't do it on feel or anything like that. If you try those things, you're going to get flushed out of the market. It's just not going to work. So I recommend his site below. If you want to click on that, see what he has to say, then I think you're going to be blown away. It's very, very interesting. Very, very interesting stuff. So please just click on that link, check it out, and I'll see you soon in another video. Take care.